Good morning, folks. How are you? You would be so kind as to let me know that you can hear me on X. Just give me a 5 by 5 and now get started. I won't keep you too long. It's not updating for me, so if you bear with me 1 second, I'm looking to see if you guys can hear me okay. I realize it's probably early. Most of you won't be able to watch this live, but I have a lot of things to do today and the rest of the weekend, so I'm not going to have much time to do my things I usually do on the weekend. All right. Thank you, MB. Thank you, Lola. Appreciate that. That's two. That's good enough. All right. So, good morning. Hope you're doing well. Lovely, lovely morning today. All right, so we're looking at a review commentary. I'm going to teach one thing about time distortion today, so that will help answer a lot of questions I'm getting. It'll also be a help for those that see it in the text format. You'll have also learned it here, so that way, again, it makes buying my books obsolete. It's not a pitch for selling books. It's just for me to put it in the annals of literature that this is the real thing and not somebody else's interpretation. All right, so this is the daily chart of the dollar index. And I mentioned this small little volume imbalance. I said that if we traded below that and treated it as an inversion fair value gap, that would likely lead to a drawdown into this area here. I mentioned also this portion of price action is where it's going to probably struggle in here. This is a suspension block. And the reason why we're having all of this difficulty here after trading to the objective, I told you we would look for at least that. We got it to the tick here. So we traded down to the volume imbalance, overshot a little bit there, and then we used its low to have a little bit of a bullish move for Friday. I want to take you out to a weekly chart for a moment. So you can see how we're in large consolidation, just sitting sideways. What this is time distortion. Whenever you see a market that's staying inside of a range, it's this large, lethargic, not really trying to go anywhere, kind of like the indices have been for months on the daily chart. The way you clear that up is go up to a higher time frame, monthly, quarterly chart, yearly chart. What price is actually doing when it's consolidating like this? It's waiting for the fulfillment of a higher time frame, and it could be a significantly higher time frame PD array. And I'll explain that in a second here. But right now you can see it's still consolidating in here. But the one thing I want you to take note of is we have a low, a lower low, a lower low, a lower low, and then we have a shift in market structure. Okay. So that's the real reason why I'm telling you I'm basically focusing on firm, in other words, continuation of this consolidation or higher. Okay. That's why I was saying what I was saying about the dollar index. If we go to a monthly chart, you can see that we're inside of this. Let me check this close here. Close 312 open. All right, so we have a small little imbalance there. So that to that, that's buy side imbalance, sell side efficiency. We traded below it. and you can see it's utilizing the bodies in the lower half here. So it would need to get above and enter into this area here and then leave this alone to be a reclaimed bullish fair value gap. But right now it's struggling because this is it's operating as an inversion fair value gap. But because of the war, because of the uncertainty, flight to safety, flight to quality, and I say that tongue in cheek because the dollar index really isn't what it used to be. But sticking with the historical reference of how flight to safety would be moving into the dollar index or dollar, let's put it that way. I'm looking for that to kind of like materialize. But if this thing can fold over, then we're probably in trouble. And it's down here. So I'm sticking with the underlying narrative that because of the war, because of the difficulty of breaching through this inversion fair value gap, that's why we're struggling with dollar index. And that's why hasn't been rather moving all that well. It's trapped basically. All right, so let's go back out to a daily chart and you'll see what that looks like in price action. You can see how we're struggling right there, okay? And I'll take this little higher time, not higher time frame, but a higher PDA rate off. So we cleared minor buy side, pulled back into that volume imbalance. Trading deck down into this. If it were to give up the ghost a little bit, it needs to really save any decline below this suspension block. Because you got this volume imbalance low, volume imbalance high. This is like the line in the sand for me. If we lose this, then I'm not so optimistic for dollar. Okay. And I know this is probably not the best news for some of you that are trading Forex because you're like, you want something to come out of my mouth and say, hey, this is the obvious, easy thing right now. But this is what the market's going through. So it's struggling to do what is required for it to have a sustained price run. And since it's not able to do so much of that, well, I mean, the techs always do that. Since it's struggling to get through this stuff, I can't push price through that stuff. I mean, we got to submit to it. So in this little area here, this is kind of like the line in the sand. If we lose this, it will most likely become inversion, and then it'll send us down below here and significantly lower. I'm not suggesting that that's happening here. I'm submitting to you if I'm wrong about price staying firm, or in other words, continuation sideways to higher. This would be the trigger mechanism for me to go bearish on dollar and then look for the seasonal tendencies to actually unfold in like euro, pound dollar, because we're entering a seasonal tendency for them to generally go higher. But we have this wild card of World War III going on, and nobody else is really calling it that, but that's really what it is. Um, all of that is being a huge catalyst for what's making these markets be reluctant to have sustained price runs. If you look at what's been going on over the last 6 months, the only thing that's been sustainable is the event driven markets like silver, gold. I told you crude oil would be the next one, and obviously it's happening. Um, Otherwise, we've been in consolidation in everything else. So what's happening is big money, deep pockets, if you will, are moving and migrating into those event driven markets and out of risk bearing like stocks. That's why it's been melting down a little bit. So that's why I've been maintaining a bearish stance on them as well. So that's the business on dollar index. I'm optimistic for higher prices or maintain consolidation. This is the trigger where I'm wrong. Okay, so I'm not playing both sides of the marketplace. I'm looking for dollar to stay higher and firm. But if I'm wrong, this right here will be the catalyst that I will use to anticipate further decline and then higher prices in euro and pound dollar. Okay. So that kind of like helps you understand what it is I'm describing here. I'm not actually trading Forex anymore. I'm not doing those currencies, but I do look at dollar index as a bellwether idea about what the economic climate is like, risk on, risk off. So let's go into euro dollar real quick. And I'm going to I'm certainly going to be well under an hour today. I messed up the last two of them. I went overboard with the commentary and discussing things, and that's the that's the problem with a live stream with me because I have so many things. It's like a fire hose. You're drinking from a fire hose, folks. Too much information sometimes. All right, so here's that sell side liquidity pool. If dollar stays firm or moves higher, this is where I said I would like to see it trade to. We ran the first target there, and we pulled back up in, and we have this small little SIBI there. It needs to absolutely respect that. I don't want to see it trade back up to this inversion fair value gap because we already did enough. So for it to trade up there and touch that again, to me, this might trade above it, then use this as footing to go higher. And then the seasonal tendency for euro dollar and or like pound dollar to go higher might materialize. So it's a little bit challenging, but I'm going to stick with the narrative until proven incorrect that we may want to wilt below this and then attack that sell side. But this is enough really for it to, if it's going to have its seasonal tendency where it wants to move higher for a little bit of time, right before the May decline in the summer months, where we have another small little season tendency in June into July, where it's usually seeing euro dollar, pound dollar go higher. It's a lot of balancing. It's not an easy market environment to kind of like break down with a great deal of conviction one sided. So just bear that in mind. If you're struggling too, it's everybody's feeling it. You know, war never makes it easy. I had a comment. Someone left a comment in one of the videos. I can't remember which one it was, but it was from this week, and they said that I agree pretty much. You might be right about Bitcoin, but no one can predict war and the effects of it. I don't believe that's a true statement. I was telling everybody in 2019 what was coming, and it would be heavy. The whole world would see it. And then I said in 2020 to my private mentorship students, they and there's lots of them out here. They can come out and say I'm a liar and prove where I didn't say that. Um, I said World War III is coming. Watch Iran, watch Russia and Israel. It's all going to pop off over there, and they're going to use this stuff to twist it all up. And we're in it now. We're in the thick of it. So more countries are getting involved, and that's world war. So when World War III happens, obviously there's a great deal of fear. Not that I'm trying to sow fear. I'm not a fear monger. I'm not afraid. You know, what am I going to do to protect myself from a missile landing in Fallston, Maryland? Nothing. You know, if it falls here, whatever. I'm going. It's done. But worrying about and fearing it is the worst thing. But then removing yourself emotionally and psychologically from it to look at price action and interpret what price may or may not do, it increases the difficulty exponentially. So you have to be very nimble and you got to be prepared to be wrong. You have to be absolutely prepared to be wrong about your analysis. And if you're wrong about your analysis and you're holding positions and you're over leveraging, you're gambling. And this is not the economic climate to do that. So looking at this, we have a sell side imbalance, buy side inefficiency that we traded up of, came back down in. Looks like it's trying to give like a little bit of a indication it may want to trade higher. I want to see the wrestling match between this potential inversion fair value gap and this SIBI. I want to see the SIBI win. I want to see it win its argument about where it wants to go. Because if it can lose the ground that it's using here, or let's look at it like this. We have the arm wrestling match between two PD arrays. So right away, does this indicate high probability? No, because both sides could be justified. When it is one-sided, and the analysis using the concepts I'm teaching you is so obvious that it's one-sided, there's no alternative view that would make sense. That's high probability. So I'm teaching not only what it is I'm seeing in interpretation of what the price is showing, but I'm also teaching you how to resolve this conflict of what makes high probability or low probability. So that way you aren't forcing yourself in low probability conditions simply because you feel like you're missing something or someone else has done something and you feel like you're feeling FOMO. And that's a very big issue right now. Everybody is afraid they're going to miss the next big pop because we're all looking for price runs. We want to see things, run for a while. We want to be able to swing trade and short-term trade and trust being in the position overnight and over the weekend. And that's a want that you're going to have to defer. You have to either endure or take a couple months off. And that's probably something that's impossible for a majority of you because you want to be doing something. You're afraid you're going to miss a move. So I'll leave that to you. You'll have to wrestle that out yourself. But when things are conflicted like this, it can be either one. So the probability shifts to low. I'm leaning on the fact that I think that the dollar stays firm or goes higher because of World War III, because of that elephant in the room, if you will. That is a huge impact on the decision making of financial market participants. Risk, overnight gap risk. Everybody sees the likelihood of, what happens if they drop a tactical nuke? It's coming. You might as well just get ready for it. It's coming. What's the perception in the world about that? How will the markets see that? It's we're all underneath this microscope, the same petri dish. We're all looking at what's going to happen. No one really understands what's going to happen. I don't. I'm learning in this environment just like you are. Right now we're all students. We want to see who knows what and what works. And whenever I have been confronted with uncertainty, my experience has taught me to dial back frequency, dial back the desire to want to participate, and then lower leverage. That means go down to the smallest leverage you can do. That way, you're not going to get hurt to the degree where you're going to get completely taken out of the game. Doesn't mean you can't lose money and it won't hurt for you to take that loss. It just means that it won't wipe you out and then weather this storm that we're going through. All right, so that's the business there. I'm looking for this to act as kind of like the line in the sand, saying, okay, I'm not interested in exploring anything higher than that. So this goes lower, and then this becomes what it acted as on Friday, a bullish inversion fair value gap. So it would be like this. This is how it's behaving right now, but I want to see it become a reclaimed bearish fair value gap. And then what that would do is if we trade down below it, come back up, we would have the backdrop of this SIBI keeping price at bay with the body. See that? Then it goes lower and it gets back into the influence of this SIBI. So if it uses that, then it would be a little bit more significant of a barrier to the upside. But right now it's 50-50. So that's what I'm looking for. I want to see this wilt and then use this as a reclaimed bearish fair value gap. Okay. Pound dollar, because we're going a little too much into talking. I mentioned that this one here, we have to watch this. I want to see this become inversion fair value gap. It went down to its low, bounced around a little bit in here. And again, same thing. We're waiting to see what the dollar index does. So if the dollar gets some repatriation of buying and flows start moving into that, and it allows them to keep booking price higher, not buying pressure. It's they have to move it out of that range I was referring to on the higher time frame. And when that happens, it'll trigger more trust in like a herd mentality. They'll pour into the dollar, and that way it'll drain out of other foreign currencies. But this one's a little bit of a struggle here versus euro. Same premise. I want to see it trade below here and then use it as inversion and trade lower. So nothing has changed here. All right, so crude oil, real quick. Again, pretty ugly in here. I got questioned about the relationship between crude oil and Brent. So if you just pull up BZ, you'll see the difference there. Okay, and Just look at it like this. There's your old high. That's your next short-term target for Brent crude oil. And then this is going to get destroyed. So we're going to see 150 easy and up to maybe 175, 180. After that, all bets are off. I don't know. It can go wherever it wants to go. All right. So let's go back out to a daily chart. Just for completeness sake, let me just throw Bitcoin out real quick. All right. So here's Bitcoin. Um, bit of business about time distortion. Okay. I'll teach it also when we get into indices. We have a long, protracted sideways consolidation. Originally, because I was anticipating further weakness on Bitcoin, which I have not abandoned that idea. I'll give you I'll give you a target for it where I think this is going to go. There you go, right there. That's your target. So we're in this consolidation here, and we already bumped that level there, and maybe that was a little bit too optimistic for my bearish stance on this. Um, but it went down a little bit and then came back one more time, bumped it. So look at it like this. See what it's done here? This fractal of what price was doing, consolidation, and run up, take a short-term high, and then sell off. I'm kind of interpreting this portion right here is doing the same thing right there. That's how I'm interpreting it, seeing it, visualizing it, and then a drawdown to this low here. If it goes below this low, it's probably going to accelerate a lot further than what we saw here. But if we can get above, and you're probably wondering, what is this orange box here? If I anchor over here, you can see it doesn't look like it has anything going on. When we go into a higher time frame, weekly, you can see the nice liquidity pool here. There's one right here. I didn't annotate that. These are obvious, real clear. Look at these relative equal lows. I know I'm killing you guys. Would you shut up? You're going to scare everybody into being short and selling, and then the selling pressure is going to. I know it's too early for this stuff, right? You chose violence. So if you look at the, almost messed it up. The, I think I did actually. Let me see. Okay. So weekly Bitcoin versus dollar. We have this buy side and balance. Let me move that. We can see it. Buy side and balance, sell side and efficiency, right there. And we traded down below it. Now look where the bodies are. They're not even touching this yet, but we did wick into it last week. So if this is in fact a market maker sell model, we should start seeing this PDA right here, provide heaviness to the marketplace. So let's go back down into a daily chart. This is the effects of what we've seen. We've seen it trade up into. And if you grade this on your weekly chart, put your gradient and octant levels on there, you'll see it's utilizing that there. So we'll see if it, in fact, wants to move lower. I will say this. If it does take this high out, that's bullish for Bitcoin, and it may want to revisit this inefficiency here as an upside target. I don't personally see a reason for that to happen, not because I'm doom and glooming it. I just don't think there's any reason for it. People are waking up to really what this thing was for a long time, and it was used for really disgusting things. And anyone wanting to be associated with it, to me, is a fool. But greed makes people do a lot of stupid stuff. All right, so we looked at. Just look at metals now. I was trying to figure out what we didn't do yet. So here's gold. And last few times we talked about gold, I told you that watch this. This is going to be the catalyst for it. If we traded below it and came back up into it, it would treat it as inversion fair value gap, and we'd go down into this wicks, consequent encroachment, and then draw into these relative equal lows. We saw that happen here, trade up into it, wilted, came back up into the wick, consequent encroachment there, sold off, big gaps. Okay. Imagine you're long on silver and you're seeing these huge opening gaps when new trading starts the next day. A lot of retail traders are interpreting price results in their trades because they're just holding. And this is a lot of money to be losing. We talked about how moving from silver, $5,000 per 100 points in that is a lot. And it's moving several hundred points per session. And over the span of 2 weeks, it's moved a lot. And here in gold, it's done very similar. So we're waiting to see this here have a body close below it. I'm watching to see what we do on Sunday. I wouldn't be surprised if we gap below consequent encroachment here. But if it doesn't, wherever we open up it, I think we're going to try to work its way down into this liquidity here. There's a lot of people that see this as support and they built up ideas it's going to keep going higher. Look at everybody. Everybody else was saying gold was going to keep going higher. It's going to smash higher. I told everybody to stay away. Longer term, over time, gold will maintain a bullish stance over silver. This is real money. This is real money here. This ain't Bitcoin. This ain't crypto. This gold's always going to have a value in terms of money. But silver is event driven. It's always been event driven. Yes, there's fundamental drivers behind the supply and demand factors of it, but there's a limited supply of it. So we're working out that difficulty in terms of what do we do with it now because they've suppressed it for decades. So I'm referring to silver, by the way. And now real demands globally have caused a real concern because you can't keep suppressing it. They manipulate the paper silver market. Silver should be way above what its actual value is based on its need to do the things we use or will be using it for in the future, and to the degree how much it would be used. And I gave the example of using it in the batteries for cell phones. It may be a small amount, but how many cell phones get bought? Okay, so it's always planned obsolescence where you have to be forced to buy a new phone because it's no longer going to work for you. So it's just, it feeds itself. So we're still watching this. We did see it trade down, which is nice. It was, entertaining to see how that happened. We got down to a low of 4,478, and then we're looking for 4415, that low there, and then we have sell side below there. And look at these smooth lows. See that? So if we get really animated, I still think that this is where I'd like to see it go to. We may get a little bit of a pop higher after that, but I think ultimately we're going to work in here. Let's go into silver real quick so we can get to the indices and I can wrap this up. All right, so here's silver. Okay, same thing. I was telling everybody that when we were here, take profits. It's uncivilized for you not to have done so, and wasn't long after this happened, and actually got hate mail. Like I caused that. I didn't cause that. Okay, and that's not me speaking with someone being an influential person because I have a lot of people that listen to me. I can't cause these types of things to happen. I know you want to believe that kind of stuff, but one person is not causing that. Okay. So just want to toss that out there because some of you get really emotional about the things I say, and it's my opinion. I can be wrong. Okay. I've been wrong a few times over the last 30 some years, but I want you to just appreciate the risks that are out there that many of you try to pretend isn't there. So we talked about this discount wick and consequent encroachment, and we saw it trade there on Thursday. And then Friday, we made an attempt to work towards that level again. Same thing. I would like to see it gap below that on Sunday's opening, and that would really indicate bearishness. The only concern, if we were to open below that, I think it would be a quick run to get below these lows, and then we might see a sharp retracement. That volume imbalance right there It could be in a wild spike of this craziness. It could gap below consequent encouragement. I'm not saying it's going to do this, but this is what I would see if I was making the market for silver. Let's say it that way. Okay, if I was the market maker for silver, I would gap lower below this consequent encouragement, send it down below this low, and then pump it aggressively up into this volume of balance. It would kill every short that's trailed stop losses. It would trick new longs in, and then keep wilting it down to into the 50s after it did that. But I'm not the market maker for for silver market. So we're looking for continuation lower on silver. High grade copper. That's a market I used to trade a lot. Relative equal lows here. Volume and balance. So we could go down there and clean that up also if you're a real metals aficionado. And now let's go into Dow. All right, so here's the Dow daily chart. And I told you, I don't know exactly what day it was, but it's obviously on my YouTube channel and you can see it. When we were going through all of the indices, I think I was comparing the S&Ts um, between the three averages. So we have Dow here, and then the ES I looked at, and the NASDAQ, and I said there was a S&T divergence up there. And I told you that we were likely to draw lower. And this is where I'm anticipating the Dow to get to. So this low right there. Okay. So we're still looking at 45,387. So far, it's performed pretty good, even though I can't stand this index. It's the dirty 30. Just it's a $5 hooker as far as I'm concerned. just I just don't like to touch it. I know I'm going to get the venereal disease if I do, so I just don't want to do anything with it. You might look at this and say, I want to have fun for a little while, and it's cheap fun. So, but that cheap fun, just like cheap liquor, tears your ass up if you keep messing with it. So the higher high here, and then this run into inversion fair value gap right here. See how they used that. I'm not going to change it orange. This is save some time, but you can see that inversion fair value gap there, trade to an octant, and it sells off and draws down into where we're looking for there. In and of itself, just trading to that low here is a moral victory. Okay, so in the current climate, if you've watched this and you've tape read this run lower and you saw it trade to that, that should be an encouragement to you that what you're learning works. It's sound logic, and it's also when peak interest was looking for higher prices. If you go back and look at social media, it's really interesting. Look at all of the big names in the industry or the people that want to be viewed as someone that has clout. Look at their interpretations of all the indices at this time right here. And you'll see they were all wildly bullish. They were all wildly bullish. And I'm out there saying, you're all wrong. You're all wrong. The old man's trying to tell you. But, it is what it is. You're going to listen or you're not going to listen, right? So let's do ES real quick. There's their failure to go higher with ES. So ES was saying, no Dow, you got a little too overzealous. And Dow usually does that. Okay. It usually does those types of things. So I got more credibility placed behind the moves of S&P because it's 500 stocks versus 30 that make up the indice. So S&P 500, that means there's 500 blue chip companies that are weighted together in here to make this indice what it is. In the Dow, it's only 30 of them. So you're not going to get the level of unwillingness to go higher here unless there's significant distribution underway. And that's what I've been telling you for months. That's what we're seeing. We're seeing heavy distribution here. And one of the biggest canaries in the coal mine was that Warren Buffett moved to cash. As we were making record highs, he's moved to cash. And then of course he's retired. And you can make all the claims you want, but nobody with that kind of money that goes to cash, okay, that doesn't happen by accident. These people know, okay, they know what's about to happen and they're not going to subject themselves to it, but they'll let everybody else chase it and get crazy. So we're seeing that roll over here, and then right over here, these lows, I like that for a draw on S&P. And then finally, let's do NQ. We're just doing it through the continuous contract. and then we're going to go back through NQ with the micro. So that way all this fits together, and then I'll teach you time distortion. So we have, how we doing on time? Oh, we're doing good. We've only been 30 minutes or so, so I got plenty of time now. Let me wet my whistle here. You doing okay today? You guys have a nice week? Did you get hurt this week? Have you learned anything? Did you witness anything cool this week? Does the old man know what he's talking about? I gotta get this here and replace it with something if I'm gonna keep doing these things from the dining room. All right, so here's NASDAQ. And over here, that's where I like to see the NASDAQ trade down into. And really specifically, look how clean that is. Okay. So on a continuous contract, 22,779.75. Okay. So that's my summer target. So in other words, first half of the year, that's where I like to see it trade down to. Okay. I could be wrong, but that's what I'm aiming for. Okay. The next bit of business would be here. And then the next one would be here. Right. So you can see how we had this relationship between NASDAQ. So we had high, slightly lower high, but look at these highs in here. And let's go back and look at ES just for a moment. Okay. Stare it right here. Kind of like put your attention right there. Put your eyesight focus right there and watch what happens when I pull up ES. Ready? See that? Diverged. It's not seeing that big sharp peak. This high and that high is higher on S&P. But watch. Oops, I already got ES up. NQ. NQ. Look at this. Okay, you're looking at that high to this. Okay, so stare right here. Watch. Watch what happens. See the divergence? High, lower high. And that's the S&T divergence that's weighting this market down. It's not the catalyst that's driving it down. It's just it's ferreting out or pulling out the information showing you that there isn't new buying coming in here that's going to support price. It's not a good market breadth, meaning that a market that goes higher and makes higher highs, you want to see strong volume support that, more buying is coming in, and they're not giving up any ground. That's not buying pressure. That's them leading price higher, and they're keeping the mark to market price higher, and it's not letting it go lower. Here, with this high and that lower high, where ES did make higher highs comparably, this high on ES was higher than that by the date comparison. So that divergence is indicative of heavy distribution and no new buying. So instead of accumulation of new longs, it's actually distribution of longs and accumulation of shorts. So if you want to speak in terms of accumulation distribution, that's what I use SMT for. So, and again, that's why I've been sticking to I'm bearish. Now, I will take intraday longs, but I've been very candid about I'm bearish on all the indices. And I'm telling you where my targets are. So no one can really kind of like argue about what I'm expecting here. And I could be wrong. Okay, they could do something. They could end the war. You know, world peace. Everything comes out. It's everybody gets $1 million for free from the government, and they end all taxation, and it would be wonderful, wouldn't it? And the market would go straight up. It would be wonderful. But that's probably not going to happen now, is it? So let's go over to the micro and then wrap this circus up. All right. So here is the micro NASDAQ, and you're all probably wondering where I got the 23,999 level. That was my final sell side for the week and yesterday, and we saw it trade down just below that a little bit and then came off that. So now I want to ask you this question. When you're looking at trading the indice market, are you referring to the continuous contract at all? Because if you're not, you're missing the boat. You're missing all kinds of insight. And when I teach top down analysis, you always see me go to the continuous contract. So the question is right now, are we looking at continuous contract for micro NASDAQ? I'll give you help. Look up here. If you see a month ever, that's not continuous contract. That's just a delivery contract month. So we're going to go into this a little bit of detail, and I promise it's not complicated. MNQ, just do that, okay? And then click this, and it'll take you to the continuous contract. Notice there is no month reference there. Notice how everything gets smoothed out in the left-hand side of the chart. It's always smooth price action. There's no spottiness, okay? When you go and you look at the new front month, like we have with the June contract for NQ, if you look at it, let me just go back to it. See how spotty it gets over here? Now, this is not helpful when we're doing long-term technical science, okay? Notice I said that, not technical analysis. ICT, what is wrong with you, guy? You laugh at your own jokes. It's a dad thing. When you have kids, you'll do it too. So it's programming. You want your kids to think everything you say is funny and cool. But when your dad, it's ICT, you don't really have to really work too hard about that. It just happens by default. This guy loves himself. All right, so we're looking at the continuous contract. Why ain't it loading up? Here we go. So we have the continuous contract. Now watch the information that's ferreted out by this. We have this candlestick's low. You see that? That is March 9th, 2026. So what contract month was trading at that time? What was the front month? March delivery, which we just rolled out of and into the June contract. So this low here isn't going to be the same thing. Let me take this off for a second. Okay. That low and the way the price action looks here in relationship to that low also, that is November's low. Watch what happens when we look at the June contract. See that? We went below it earlier and we're below this low already over here. But whenever you're looking at higher time frame analysis, you want to be using a continuous contract because it's always factoring in front month. That means whatever the contract that should be traded right now, that it's always using that data. Whereas now, everything that this contract month at June, all of the price action on this contract will be utilized to make the bookkeeping for this composite run of NASDAQ continuous contract. So it's always factoring in the nearby month, which is why it makes it much more powerful when you're doing your analysis. If you're just simply looking at the contract month of delivery, like March, June, September, December, if you're trading indices, you're not getting the full picture and you're going to miss things that would otherwise not be aware of by looking at just the delivery contract month you're trading. And what do I mean by that? Well, you have this low here. What's the low of this candlestick? Look up here. The low is 23,999. That's where I got that level from. Okay. And the market utilized that and went on Friday, went below it to 23,970 and three quarters. Okay. So I had a nice little run below that pool of liquidity, but left this one here. Now, again, what chart is this? Is this the June contract for NQ? No. It's the continuous contract because there's no month being mentioned here. So the levels are going to be much more impactful. That sell side's the next draw on liquidity. So you would do this. Okay. And make sure it's red because you got to have your chart look like Deadpool. I don't like Deadpool. I'm a DC guy. Well, there's something wrong with you then. So there's a problem with not having these levels on your chart. Same way what we're looking at here, continuous contract. See this here? We talked about this. I don't know exactly what recording it was, but it's your duty, your responsibility to keep track of when I said what I said. Okay. Um, Some of my best students are the ones that when they take their notes, and if you listen to Pip Munch on Trader Roundup, she was going through the process of recording, and she's not the only student that has done this, but most recently, it's something I commended her on. I said that I really appreciate when you come out and you say that when you annotate your notes, you also record the video, the title of the video, and the minute marker where I said something. And it's real important for you guys to start doing those things. Whenever I make a call on what I think the market's going to do, it's real easy to hold me to the fire. Just record the time and date of the video and write it down. ICT said this is going to happen, and this is where he said it. And by doing that and collecting all that stuff, you'll see I'm right a lot, a lot. And the things that you read about me or see about me on the internet is just basically bullshit. It's clout for them to get engagements. And I get it. I understand. It's fine, but that's free advertising. It brings people here. So when I'm talking about things like this, utilizing the continuous contract, just make sure that you always include the levels that you see me refer to. And if you don't understand where I may be getting that information from, chances are it's based on the continuous contract of the market I'm looking at. Okay. So with that said, you know what's down here, right? That's what I'm looking for my summer target. So the first half of the year, going into June, or certainly by June ending, I would like to see price be below these lows here. Now that might be overzealous. I might be off in my timing aspect of it because my weakest point of my trading is the exits. That's the part I'm trying to perfect all the time. And getting in is easy. Getting out exactly where I want has not always been as easy. I'm not satisfied with it. So to make this thing real easy for you and make it easy for me where I'm satisfied with it, we're looking to simply for the market to draw down into these relative equal lows on the continuous contract because there's no month code in the title here. Okay. So it tells you it's continuous contract. If you're ever looking at my charts when I'm doing annotations, or if I'm tape reading with you, if I'm talking about a market in commentary, be mindful of the upper left hand corner. I always keep this title uh, description up here so that way it'll afford you the information on whether or not I'm using continuous contract or if it's a delivery contract month like March, June, September, or December, because there's only 4 contract delivery months for index futures. All right, so we're going to take this information here. That is the 21st of November, that volume imbalance. Okay, we're going to borrow that logic here and we're going to carry it over into June. So MNQ, M for June delivery, 2016, 2016, 2026 rather. I want to go back to 2016. Can you tell? All right, so here's that same bit of business here. Scrunch that over. Look how significantly lower we are. We're really far away from that, but we're reaching lower like I've indicated we would likely do. But now let's go back to continuous contract. This is the part you're missing. M and Q, no symbols after that, and just click the top one. Okay. If you look inside this volume imbalance while watching price action, the trades are going to be made on front month, which is right now June. We rolled out of March on Tuesday of this week and went into June. Monday, we tracked the March contract still, but on Tuesday, we rolled over into June contract. This volume bounce extended over to the right. We're going to look inside of price action on Thursday and Friday, right here, with this volume imbalance, with the expectation that market's going to do what? Draw to this low, draw to this low, and in the direction of this longer term time frame draw on liquidity. Okay. With the backdrop that we're in heavy distribution because we had SMT divergence. We've seen Warren Buffett come out and say, I'm in cash, bro. I ain't trying to take any risks right now. All the things we're telling you that this is not a market that's bullish. We have World War III going on. Everything's a mess. So is that a scenario where everybody feels confident to go in here and buy stocks? No. Data is coming out and all the data is being delayed. Government shuts down. Oh, well, okay. Can you trust the data? I don't. So the point is This is not an economic climate that bodes well for being long on stocks. So if it's not likely to go higher, what is it going to do? Go lower. Okay, so we're going to look inside here. We're going to go down to a 15-minute time frame, and we're on electronic trading hours. Yes. All right, so look what happened here on Thursday. We wick through it, stopped dead in its tracks in the consequent encroachment, that daily volume imbalance, trade up into an inefficiency that you saw on the chart. We'll go back to it in a minute. We wilt lower here, here, back through it, and now we're using the lower portion of it because what? We traded down outside of it. So this becomes a premium array. Order flow, stay out of the upper half. The bodies are indicating that they can't even get to the midpoint of that volume imbalance on the daily chart. Is that bullish or bearish? It's bearish. It's trading up inside this inefficiency there, right to the midpoint of it. Sells off. Where's it trading to? 23,999. Why? Because continuous contract says there's sell side there. And the low went to that 23,970.75. So it got that liquidity. Okay. Let's go into there's that 23,999 1 minute chart. Traded beautifully. And there's that gap that they showed you there. How to use that. Now we're going to talk about time distortion, and I'm out of here. Okay. Why in a hurry, ICT? We want to hear you talk for a long, long time. No, you don't. It's a weekend. Enjoy it. All right. So this is what everybody's referring to as ass price action. It's not my term. I didn't coin that. That's what everybody's saying. I've looked at social media, people that don't necessarily use my information, but are just commonly talking about the markets. The general consensus is that the market's price action is quote unquote ASS. So I'm going to help you decipher what's going on when it happens. So when you look at price action like this, let's do this. I'm going to clear everything off. And you're watching price, and you're just looking at this stuff, and you're thinking, like, wow, like this is bad. Like it feels like a root canal, right? I wouldn't know. I never had a root canal, but I heard it's pretty uncomfortable. And speaking of comfortable, I gotta fix this pillow behind my back here. Hold on one second. Sitting on these wooden dining room chairs doesn't really work when I'm doing these long-winded discussions. So this whole business right here, this big block of price action, okay, this is time distortion. This is what's going to beat you up. And the question is how long does time distortion go? How long will I have to submit to it? When I first discover it's occurring, what do I do? What's the protocol? Okay, well, what time frame are you on? 1 minute. So watch what happens. If you know you're in this range, this high to that low, it's hanging around in that. It's just simply not moving outside of it. I'm going to make this a very ugly yellow color. Okay. Not because there's other things on the chart because I cleared it all off, but I just want you to see this range. Okay. Ugly, right? There isn't a whole lot I can do in that. Maybe one or two things in there, but I can see where if I tried, I would have probably got stopped out about 4 or 5 times in a loss. So when I'm seeing price action like this is time distortion. What does time distortion mean? You're on a time frame that price is being distorted and you won't see it for what it really is. So how do you fix it? How do you bend time to a usable medium so that way you can see what is it really doing here? Ready? You got your notepad ready? You have to go up to the higher time frames. Time distortion requires you to go up in time frame. Ranges that spend a lot of high resistance on the higher time frame, the way you can combat that is drop down to lower time frames. When we're seeing time distortion like this, the way you rectify this and get yourself calibrated to what it's doing, you go up to a higher time frame. So watch what happens. We're in a 1 minute. We're going up to a 5 minute. Still part of a small little inefficiency there, but it doesn't really indicate anything. It's still not clear as to what it's trying to do. Well, above 5 minute, what's a nice little bellwether time frame that we like to look at around here? 15 minute. Should already jump off the chart at you. What do you see? See that? Now I'm going to keep this portion of price distortion annotated that was referencing the 1 minute chart. This is what it's been doing. You look at the high, I'm sorry, the low of that candle to that candlestick's high right there. All price is doing is working towards using this inefficiency on the 15-minute time frame. Now, what happens if this gap didn't exist here and we were looking at a 15-minute time frame and it was doing what the 1 minute was doing? What would I do? I would go to the 1 hour or the 4 hour and I would look for the inefficiency it's trying to get to. Because it's all it's doing is trying to just get to this area here. Now, if we're bearish and we're expecting that 23,999 level, and I think my tweets kind of confirmed that that was valid by me saying that's not cherry picking it or hindsight. So while price is here, we're looking for lower prices. We're looking for those hello relative equal lows on the daily chart. I'm bearish. While it's doing this, it trades up, but look at this up close candle. When it trades up, I think we've communicated this. I can take the yellow off. 4 minutes to finish this, and I'll be under the window where you guys can hear it in translations. There you go. This SIBI, if it's bearish, do we want this full gap to close in? In other words, do we want to see these candlesticks go all the way up to the high of that? If it's bearish, can it do that? Yes. If it's bearish in a trade idea that you're a participant in and you're looking for lower prices, optimally, is this what you want to see? No. You want to see price stay in the lower half of this gap. This candle's high, this candle's low. You want to see price make an attempt to get to this midpoint. If it does, as soon as it touches it, you are watching to see what the body does. Does the body close below it? If you do see that, that's real institutional order flow. You do not need to see inside of a candlestick how many orders were at this price. That is absolute bullshit. There's no difference between that and everything else in retail. You're attributing so much religious viewpoints to this information, and nobody's doing it the same way, which means what? It's up for private interpretation. And private interpretation is no different than looking at support and resistance, Renko bars, Elliott wave, count the waves. You get 20 people in Elliott wave theory, sit them down in any market and tell them, go through all these different specific time frames. Not all of them are going to agree. They're going to have different wave counts. They're going to have different this and different that. Why? Because it's still a religion. I'm teaching you that when you have an inefficiency like this is obvious. No one can say this isn't an inefficiency. It's a sell side imbalance, buy side inefficiency. That means it's a down close inefficiency. It's defined by this candlestick's low, this candlestick's high. So if we're bearish and price trades up into it, it's not ambiguous. It's not, well, if it does this, it might be. No, it's this. Anticipated trading to midpoint. It can wick above midpoint, but it cannot lay down a body in the upper half if you're looking for it to go lower utilizing this gap. Chris Laurie didn't teach that shit. The guy he learned from didn't teach that shit. Okay? So that's the facts, that's the historical record, okay? So here's what's happening. The close on this candlestick doesn't even lay down on the midpoint. We're in lower time frame time distortion, but it's simply just trading up into a higher time frame inefficiency while being bearish. Anticipate it retracing higher. Once it gets into this inefficiency, start looking for price to stay out of that portion. This is do not trespass. What happens if you trespass? You better get the hell off here before I shoot your ass. Well, what does Price do? I'm out of here. See you later. I'm gone. Bodies in the lower half. Exactly what real institutional order flow looks like visually. It's not complicated. If you think that what I'm describing here is complicated or complex, spend a little bit more time studying it. If you don't have it grasped by 3 months, move on to do something else because you're simply just not capable of picking this up. And I can't fix that for you. I'm not saying you're stupid. I'm not saying you're dumb. I'm just saying that you don't have the aptitude currently to get what I'm saying here. And it's not complex. It's very, very simple. If we're looking for inefficiencies as a point of entry, we're looking for the lower half of it when we're bearish. And we want to see it respect the upper half and say no trespassing. Can't get in the upper half of that. When we're bullish, we want to see the opposite. We want to see it trade down into an inefficiency, and then it can wick in the lower half, but it can't leave bodies down there. If it does leave a body, it needs to leave the range entirely, then come back, re-enter it, use it as support idea or like a discount sensitivity, then stay out of the lower half. Then it becomes don't trespass in the lower half. Isn't that simple? I mean, seriously, folks, if you're watching it or if you're watching it later on, just send a tweet to me on X and say, yeah, this is really easy. But if it's complicated, say it's complicated. If they do say it, don't troll them, don't beat them up, because it just means that they may need me to say something in addition to what I just said here, and I can help them understand it better. But it's not meant to get you guys arm wrestling about who's smart and who's not. But this is simplistic. Like children can see this visually and understand, oh, it's going to act like this, it's going to act like that. It's very specific rule based ideas, and it's not zones. Okay, it's not zones. Look at these levels on the bodies and you'll see they're on the octants. But that's probably random, right? Anyway, I'm gonna let you go. It's been fun. I hope you guys have a very pleasant weekend, and I will, if Lord willing, get a chance, I'll touch base with you again on Monday. Till then, be safe.